us. Well, Hitachi Energy is the next company we're speaking with. It was a mixed set for the second quarter. So there was a 10% top-line growth, but down the line, things don't look all that well. There has been a bit of compression if you look at EBITDA, profits, etc. We have Mr. Venu, Managing Director and Chief Executive Officer at the company, joining in to take some questions. Mr. Venu, good morning. Great to have you here. Prashant this side. If you can just contextualize these numbers, what happened in Q2, and just give us a sense of the business. I mean, the three growth drivers for you: transmission, electrification, and renewables. How's traction in these three segments, and what's really going on? Go on.
Yeah. Thanks, Prashant. Good morning, and thank you for having me here in your show. And Q2, if you really look at our Q2, let me decode our results. Our orders, we had a very high orders, almost 50% increase in orders sequentially, and 36% increase in orders by unwind. And we also have a very good orders pipeline across the sectors, not only transmission and renewable, but also rail and other segments have contributed this high order growth in that. And resulting this is that we had a very all-time high order backlog of 7,500.
Right. Mr. Venu, we have the numbers. If you can explain to us qualitatively what is happening, because we have all the numbers. Is there execution issue still? You're not able to execute as you would like to? Go on. Yeah.
I'm coming over there. As we said, we have been having a challenges of supply chains, etc. previous quarters, and we continue to maintain that we are improving it. If you really look at our sequential performance, we have improved compared to previous quarters in that. That's how our improvement has come in, and our long-term demand drivers are intact, and our margin strategy, that is that by end of FY25 we want to get into double-digit EBITDA margin strategy is also well on track in that. So three things are playing at our thing. One is that our demand in the domestic market, our growth levers, which is exports and service, are also contributing this margin accretion sequentially over a period of time, and then that will eventually get us to 10% growth in that. And we're also saying that on the market standpoint, if the market is going X, we want to grow ahead in the market, and that has been also playing very well. And our strategy, give me another 30 seconds, our strategy of making in India for India and the rest of the world is really playing very well so far in that. We are continuously maintaining almost 1/4 of our orders as well as our revenue coming from the exports across the geographies in that.
All right. Hi, Mr. Venu. Good to see you in. Nigel on this side. Well, sir, you have outlined things, right? Order book is looking good. Supply chain issues are behind you. And you're saying, you're going to outgrow the market. So that's good news. And that's what you've done actually in the past few years, though growth doesn't look that good. But you've actually outgrowing what your market, your industry is growing at. Now, tell us by the end of this year, what do you end up with in terms of growth? Will you grow in double digits for the year? Mr. Venu, will you grow in double digits for the year? For the first half, you've grown by close to around 8%. And your margins have been in the vicinity of around 5%. So will the second half of the year be much better? Can you grow in double digits for the year? Point number one. And can margins improve by, say, 100, 200 basis points? Because 10% is what you're targeting in 2025. So there'll have to be some improvement even in these quarters. Please go ahead.
Right. So thank you, Nigel. Good to see you again. So as I said, sequentially we are improving it. Okay, we have a very good portfolio, and our order backlog is very robust. We are able to execute. Our customers are picking up our products, whether it's a product, system, services. There's a huge demand, and the supply chain constraints have eased. There is a bit of backlog. We need to work on that. So, but having said that, our strategy is to grow ahead in the market. And the second half, definitely we will endeavor to see that we grow in higher than the market in that. And once we increase our revenue, and naturally we get the margin accretion, that will also help to further improve in this second half of the year.
So, Mr. Venu, going by what you're saying, for the year you'll grow in double digits. Second half of the year will be better. First half you grew by 8%. So, double-digit growth for this year, is it on track? And margin improvement will come about with operating leverage. So can we have margins bottomed out? Do they move to around 7-8% for the second half of the year? Please go ahead.
I don't want to put any number there, Nigel. You know very well that all I'm saying is that we are improving it. We are growing higher in the market. And once we grow, then automatically the margin accretion will come into it because we have a very nice portfolio, mix of broad-based segments and also both domestic and exports, as well as
Sure.
service. Digital should contribute for the margin accretion.
Okay. Well, since you mentioned exports, I want to talk a little bit about that, sir. In Q2, your exports were at 25% of your overall order book, and the export
Right.
orders went up quite a bit. I want to understand which are the geographies which are doing well for you, which are the segments which are doing well, and are you facing any slowdown? Because, there are a lot of geopolitical tensions right now, especially in areas that you operate in the export market. Are you seeing any hit because of that?
Yeah, thank you, Sonia. I think the geopolitical challenge is extremely very big. All of us we know that, but India is very well positioned in that standpoint. But our exports, as I have been telling you previously, is a three-pronged strategy. The first one is we have a certain global feeder factories where the product is in Hitachi Energy globally. We only manufacture in India, and then we sell all over the world. That's the number one. And the second one is we have certain allocated markets, and then where we go and develop the allocated markets together with the local organizations, and then we sell our products. And third one is we have the feeder factories where we make the components to sell it to rest of the Hitachi Energy factories. So far we're not seeing. In fact, we are seeing a lot of the pipeline is very robust in the export market, and as you know that we have set ourselves the target of 25% by 23. We have reached 1 year ahead of the curve. So right now we are stabilizing. We are in the range of 25, 26% coming in that range. So there's a good pipeline at this point in time on the export projects. And
so you'll stick to this target, right? 25% of your order book. You don't want to grow it further. Okay, got it.
Not that we don't want to grow further. We want to stabilize 25% and then take it up to the next level of growth.
Okay, got it. The other space I wanted to ask you about, which is really picking up now in the domestic market, is EV charging and this whole, railway and metro space. You do have about, I think, 40% market share in railways already. What are the incremental orders that you're getting in there? Can you just quantify it for us? And also in EV charging, this entire space, this ecosystem, what is the kind of potential that you see?
Yeah. So, the rail is one of our key growth segments. And, if you really look at orders from this segment in the range of 15-16%, ballpark coming from these rail segments alone. And the rail segment, the market is going up. And if you recall, to 1 quarter or 2 quarters back, I put it up around 5,000 to 6,000 crores as the total market for the rail for our addressable market. Today, this market has gone up to 8,000 to 10,000 crores because we are coming up with Vande Bharat trains and the cross-country electrification, metro train projects, and 9,000 horsepower trains. So all those things, help our technology can help in those segments as well in that. So it's quite a big market, and the market is really growing much higher.
So this may seem a little tangential, Mr. Venu, but on the transmission side, last time also when you were here, you were saying that that's the market which will grow very very rapidly, right? But on the is exports and transmission work on the export side also a big opportunity? I mean, rebuilding efforts in a lot of countries. I've heard, by the way, from companies talking about the opportunity, for example, in Ukraine, as that country comes out of the conflict, and you would need a fair bit of rebuilding. I'm just, is that something you're looking at?
No, the energy transition and climate action plans are really bringing a lot of opportunities in the transmission segment, especially on the HVDC, power quality, STATCOMs. Those are the one. For example, in the last quarter, we have booked one large, high-powered STATCOM orders, a couple of 100 crores, and that's a example to show that how these renewables need this kind of technologies. And I've been also telling in our show that India as a country was requiring one HVDC project for every 4 to 5 years. Today the need is every year one project, which is almost 6,000 to 8,000 crores worth of project per year. So those are the projects are coming for bidding, and they are quite a large projects, and where our company has seen this. And we are invested in our factories expansions. In the last 1 year, we have inaugurated the 4 new greenfield projects, factories in catering to these kind of projects in that. And exports is also another opportunities where we are looking at it. Both our HVDC and the STATCOMs, the factories which we have set it up here, they are not only meant for in domestic market but also for the export market.
Okay, all right. Mr. Venu, very quickly before we let you go, you're not giving us a guidance for the year, but you're giving directional outlook, so that's good. But tell us on the order book. The order inflows this year have been very, very strong. I think it's more than what you saw in the entire of last year. So what is the total order inflow you're looking at for this year? That's for FY24 by the time you wind up. And also you have bid for various orders, right? So what is the total bid size that you're looking at? I mean, what is the total size of projects that Hitachi has bid for? Please go ahead.
So as again, the pipeline for us is very, very robust. The pipeline today, if I put it, is at least 50-60% more than what it used to be in the last year. So that tells you that, and our hit rate is quite high. It is in the range of 30 to 40%, depending upon the sector, segments, etc. So based on that, one can always make an assessment then where we're going to land it up. We are right now, our factories are getting full. So we are working with our customers, de-bottleneck some of those, issues of the delivery times, etc. But otherwise, the market is in a fantastic at this point in time, Nigel.
Okay. And you want to put a number, sir, to it?
Number.
What is the
number? The market is growing X. We want to grow much higher than X.
Okay. Well, the much higher can be anything, right? It can be 2x, 3x. It can also be 10x to the market. So that's what we're trying to get at. But I think your service contribution, right? You have a plan to get it to 15 to 16% in the next 3 to 4 years. Currently, your services contribution to the order book is in high single digits. Can you tell us what is the outlook for FY24 and FY25?
So we have now very close to the 10% mark of the service, because service, we have a huge, install base in India. We have been present last 75 years. We have quite a lot of install base. So we are now productizing this service offerings to our customers, including life expectancy, life enhancement of those things, and also digital service. Those are the things would get us from what we are now from 10% to 15% in the next 2-3 years time in that. And as you know, the services have better margins, and that would also help us in the margin accretion going forward.
Services and exports, I think both those two will be drivers as well going ahead. It's always good speaking to you, Mr. Venu. Maybe by the end of the third quarter, you'll give us some more concrete numbers. One number we have is you're going to be moving to double-digit margins by 2025. On the growth aspect, we'll have to see how execution is picking up. But all in all, thanks so much for joining in and filling us in with a fair sense about how the business.
Very happy Diwali to all of you. Happy Diwali.
Likewise. Wishes to you as well as your entire team, Mr. Venu. Thanks so much for joining in.